Hi guys, Christian here. Thank you so much for taking the time to watch this quick little video. So I'm quickly going to run you through, why you should still submit your company's returns even though it's not active. We get asked this question a lot. So every week we get some sort of version of this question. So a lot of people say, I did not do any business for the past year. Do I still need to submit any return? And in short, the answer is yes. A company that isn't trading still files every single year. So in South Africa, a dormant company still has to file with the CIPC. So the CIPC is the company registrar, and SARS is the tax authority, which also have to file with every single year. If your company is dormant, the returns are just shorter and cheaper with a lot more zeros in them, as you can imagine. Okay, so in this video, there's 4 things that you'll walk away with. You'll know exactly what counts as dormant, when every return is due, what ignoring this will cost you. Your monthly SARS penalties creep up and compound over time, and what to do. We'll tackle a few different scenarios. So what counts as a dormant company? Okay, so the plain meaning is dormant simply means that your company is inactive. It means it's registered but not trading, nothing more. So SARS has a very strict test to determine if your company is dormant or not. So what SARS says is a company is dormant for a tax year only if it didn't trade at all during that year. So no income, no expenses. If you traded for even a part of that year, you still have to file it as active for that specific year. That's a very important thing that you need to know. So 2 misconceptions, 2 things dormancy is not. So it's not an official status that you can apply for. So there's no form that makes your company dormant and no register of dormant companies to move into. So in the UK, they have one, but South Africa, they don't. So it's not an exemption. So it's the CIPC, its own frequently asked questions, spell it out. You can look this up on their website as well. The Companies Act makes no distinction between active and an inactive company. If your company is registered with them, you still have to file your annual returns with them. So what a dormant company still files with the CIPC is the next part we're going to tackle. So the first thing that you're still going to have to file with the CIPC is your annual return. So you have to do this every single year, starting on the anniversary of the company's incorporation date. Then 30 business days from that date, from the anniversary date, you'll have to file it before the return counts as late. So, and then if your company was not active during that year, so like we said, if this is now for a dormant company, the turnover you declare if the company didn't trade would be 0. So if you go on the CIPC and you file your annual return, you'll just put it 0 there if you didn't trade and you're not sure and you're sure you didn't trade. The CIPC fee depends on your turnover. So as we said, if your company is dormant, it would be 0. And a company that earned nothing pays the lowest band on the CIPC's calculator. So a fee calculator will show what any outstanding years add up to. So you'll most likely, as of the making of this video, you'll pay 100 Rand if you filed your annual return on time. So if you stay within that 30 days rule and you file it every single year. If you filed it a little bit later, you'll have to pay 150 Rand. And we get a lot of clients that they miss a couple of annual returns. Then firstly, their company is deregistered. And then secondly, if they want to get it back, then they have to pay all these fees. Then you'll also have to do your beneficial ownership declaration. So this is essentially just a declaration on who owns the company. Since July 2024, the CIPC blocks them until the declaration is up to date, dormant or not. So before you can do your annual return, you'll have to do the beneficial ownership declaration. It gates the annual return, as I said, so you won't be able to continue on their portal to do it, to file your annual return if you haven't done your beneficial ownership. and the CIPC charges nothing for this. Okay, now here is what a dormant company still has to file with SARS. So the company tax return is the first thing that they will have to file. So every company registered at CIPC gets an income tax number automatically. This is something that you should remember as well. So if you register a company yourself or with us, you'll get a tax number automatically. SARS expects your income tax return every year. It's also called an ITR 14. Just remember that as well. And it's due within 12 months of the company's financial year end. For a dormant company, it's the short version of the form. So you confirm the company is dormant, and then on that form, you'll declare zeros. If you need help with this, just let us know. We can help you. Okay, so you'll need a registered representative. To file anything, the company needs the person SARS recognizes as speaking for it. So old, never used companies often have nobody for this role, which locks you out of e-filing entirely. The appointment has to be sorted out before any return can go in. We can help you sort this out as well. We can help you register or get a registered representative. Then every company is automatically a provisional taxpayer. So if you're an individual, like if you just yourself, your personal income tax return, you can obviously also be a provisional taxpayer, but it doesn't mean automatically that you're a provisional taxpayer. We're going to make a video of this in the future as well to figure out if you are a provisional taxpayer or not. But for all the companies, we're just talking about companies now, you're automatically a provisional taxpayer. And the first, if you have a February year end, your first provisional tax return would be due at the end of August, and the second one at the end of February. And you still have to file these, even if your company is dormant. Okay. Then VAT and payroll returns, if the company has those numbers. So a VAT and your pay-as-you-earn number stays active until it's cancelled. Until then, you have to still file your VAT 201s and your EMP 201 returns. So your VAT 201s is obviously your VAT returns, and then your EMP 201s, that would be for your pay-as-you-earn if you have employees. If you want to stop, filing zeros for them, you'll just have to deregister for VAT or deregister from your EMP 201s. We can help you with this as well. Okay, so we've just summarized the year for you now. So for the CIPC, the thing that you still have to file is your annual return and your beneficial ownership declaration. Then for SARS, you'll still have to file your company tax return and your provisional tax returns. If you are registered for VAT 201 or for EMP 201, you'll still have to file those if you are registered. If you're not sure what your company still owes, you can just let us know and we'll do a free check for you. You just let us know. Okay, so what happens if you just ignore all of it? So nothing at first, that's the trap. Then there are a couple of things that fall apart. So SARS penalties start and they recur monthly. So once SARS issues a final demand and 21 business days pass, admin penalties run per outstanding return per month. These can range from 250 Rand to 16,000 Rand per outstanding return per month. A dormant company sits at the bottom band of 250 Rand. Okay, 35 months is how long the monthly penalty can keep running on a single unfiled return. So 3 unfiled years of penalties running for a year for a company that earned nothing can go up to 9,000 Rand in penalties. Okay, the second consequence is the CIPC starts deregistering the company. 2 missed annual returns in a row, and the CIPC assumes the company is defunct and begins removing it from the register, automatically in bulk without notice, going only to the email address on its records. So what can happen if your company is deregistered with the CIPC? The bank account can be frozen, and assets can be forfeited to the state. We haven't really, this is what the CIPC says, but we haven't really seen that in practice. So take that one with a pinch of salt, please. Okay, consequence 3, the company goes publicly non-compliant. So its status will be visible to anyone who checks the registrar. So an unfiled company, you won't get a tax clearance certificate, which means if you apply for tenders and stuff like that, you won't get accepted. And for a lot of, if you want to do business with big companies, they can also request this, and you won't be compliant and you won't get their business. So what does it cost to keep a dormant company alive? So luckily it's less than most people fear, and far less than the penalties, which can pass 8,750 Rand per unfiled return if you let them run. Keeping it compliant is the cheap option per year. So your CIPC return can cost you 100 Rand, if you have zero turnover, if your company is dormant. Your annual return filing would then be 320 Rand, your beneficial ownership filing 550 Rand, and your dormant company tax return is 270 Rand per return. Just want to clarify, these fees here, 320 and 550, that would be our filing fee if we do it for you, and this one as well. So these are not things that you pay the CIPC or this one for SARS. These are our fees. This would be what we pay to the CIPC on your behalf. Okay, so what should I do with my dormant company? There are a few different scenarios. Okay, scenarios 1 to 3. Keep it, close it, or stop the clock. So the first option, you might trade again one day. So keep the company, keep it compliant, file your annual returns, do your BO declaration, file your dormant income tax returns each year. Make sure it just stays in good standing. If you want to trade again one day, it's fine. There's no penalties and stuff to catch up with again. Okay, the second one is you're done with it for good. Then you should deregister it properly. The CIPC application is free and done in the right order. It takes the ongoing obligations with it. Don't just stop filing and hope. The third option is, the third thing that can really happen is the CIPC is already deregistering it. So if a notice arrived or the status says AR deregistration, you can still stop the process. You can file all of your outstanding annual returns with the BO declarations before final deregistration. Okay, then number 4, your company can be deregistered and SARS is sending penalties. So deregistration at the CIPC doesn't close the company's SARS profile. That has to be shut down separately, or the penalties keep coming. So there are 2 deregistrations that needs to happen. So it was deregistered, but you want it back. If the company had assets or it was in the business when it was removed, reinstatement can revive it. Otherwise, starting fresh is often quicker. Okay, then if you're not sure which one you are, we can run a free company health check, and we can pull all of your annual returns up on a screen, and we can show you through everything to show where you stand. We can do it with SARS as well. Okay, so we get asked these questions a lot, so I'm just quickly going to run you through it. So, does a dormant company pay tax? Not on income, it doesn't have. So, income tax is a percentage of profit. So, no profit means no tax. The penalties are the danger. They're charged for not filing, not for earning. So, that's an important distinction to make. How long can a company stay dormant? Indefinitely, as long as the filings keep going in. There's no time limit. Companies are parked for years and woken up when needed. My company traded for 2 months, then stopped. Is it dormant? Not for that year. SARS test is no trading at all during the year of assessment. Trade for any part of it, and that year files as a normal active return. Okay, these are some of the paperwork questions we get. What turnover do I put on the annual return if the company didn't trade? The real number would be 0. That puts you in the lowest CIPC band, and remember, then you only have to pay 100 Rand. Does a dormant company need financial statements? The Companies Act still requires annual financial statements to be prepared. With the annual return, most small companies file the simpler financial accountability supplement instead. With a dormant tax return, attaching financials is optional. So that big word, most small companies file the simpler financial accountability supplement. You'll see there, when you file your annual return, you get an option to file your FAS, they call it, or your AFS, which stands for annual financial statements. So if you have a very small company, small meaning your turnover is less than 1 million a year, you can just select the FAS. My company has an assessed loss save up. Does going dormant affect it? It can. So an assessed loss generally only carries forward if the company trades during the year. If the loss matters to your plans, get advice before letting the company go quiet. So is a dormant closed corporation different? So it's the same story. A CEC files its annual return in its anniversary month with an extra month's grace, and it's no tax returns like any company. The law doesn't distinguish active from inactive closed corporations either. Okay, the takeaway is you can keep it, close it, or revive it. The one thing that's always wrong is doing nothing. So a compliant company costs about 1,240 Rand a year. So it's your annual return, beneficial ownership, and your dormant tax returns. So yeah, if you guys need any help with this, please let me know. I hope this video helped you. I really hope it did. And yeah, please let me know if there's any other questions.